The President and Chief Executive Officer of MTN Group, Ralph Mupita, has reviewed the operations and financials of the telco giant in 2025, outlining key areas of challenges and opportunities. In a conversation with Roscola, an equity analyst with PSG Wealth, the MTN top executive also touched on the challenges and opportunities and its ambitions for the year under review. Let's listen.
2025 is the corporate strategy we have at MTN. And it's really driven by, our belief that there is a structural demand for data services across Africa. And we also see a structural demand for financial services, particularly from those who are excluded by banks. And that's many people across markets, particularly outside of South Africa. And, there are four key pillars to that strategy. The first is, kind of building the most valuable platforms. And the key platform there that we're focusing on building and extending its capabilities is our fintech platform. So that's strategy point number one. The second leg of the strategy is really about leading connectivity operations. We're a wireless, first business. We are investing more into fixed, particularly around home. And so the core connectivity operations, which take up about 95% of our capital allocation, is an important area for us to still, see growth. Many of our customers, we're close on to 297 million customers, just slightly over half of them actually using data services regularly. So we've developed a strategy around that, which we call leading connectivity operations. The third element of Ambition 2025 is really what we call creating shared value, and two main legs to it. The one is how we think about broad-based ownership in the markets that we operate in. We think it's important as part of how we operate that local institutions, individuals own part of the company. And that's what we call kind of broad-based ownership, not too dissimilar to what we have here in South Africa. And the second leg is really around ESG, our commitments towards emissions reductions, our commitments towards social obligations, gender diversity. So that's the third there. And the final pillar of our strategy is really what we call accelerate portfolio transformation. And the key of that is focusing the business on Africa. We used to be a business that was in Africa and the Middle East, and we've retrenched over the last couple of years out of the Middle East. So that's a key part of our strategy. And then two other important components is really about how do we reduce the leverage. Historically, the group had quite significant dollar-denominated debt, which we've managed to kind of reduce. And the final part is the structural separations, particularly for our fintech business. So that's, in summary, what Ambition 2025 is. And when you ask the question, how do we feel about it 6 months in? We feel pretty convicted that we're on the right strategy. I think the financial representation of that, you saw some of it in our Q1 trading update, and I think you'll see a bit more of it as we release our half-year results in early August at the MTN Group.
I'm going to touch on the cash flow in a minute, but while we're on the topic, your mobile money, Momo, fintech, as you've mentioned, obviously seen incredible growth over the last few years. I see the monthly active users are about 63 million, which when you put that in perspective, obviously that's the whole of Africa and beyond. But that's essentially the entire population of South Africa, 65 million odd, which is incredible. So that's a huge key growth driver for you. We've seen the partnerships with MasterCard. What is the strategy going forward? Are there more partnerships involved? Are there synergies to be seen? Maybe if you can just touch on that for a bit.
Yeah, we're excited about the mobile money fintech business. We've been at it for 15, 16 years. If you see where we started off in countries such as Ghana and Cote d'Ivoire, that's when we started in about 2009. And these were very simple, money businesses, cash in, cash out transfer business, P2P, and obviously that's evolved over time. And so the last couple of years, we've been very focused on ensuring that this business, which has been scaling fast, is fit for the future. Just a couple of data points. When I joined in April 2017, We had 17 million monthly active users in mobile money. Now it's 63, as you say. So it's been growing very strongly. And I watch a couple of metrics, the kind of monthly active users, but also transaction value. And in constant currency, our transaction values were close on to 49%, in the quarter one, report that we sent out. So there is, a nascent demand for these services, given the level of kind of bank, and insurance company penetration in some of these markets. And that hasn't gone very far. And so it's created an opportunity for the likes of ourselves to be able to provide services. So we've been focused on a couple of things to build and scale the platform. The first is to start, developing the products that we believe are future fit. And we focus on 3 particular segments: bank tech, which is kind of like nano loans, the ability for our customers to be able to, take on loans, and these loans get repaid like in a 14-day cycle kind of max. So these are kind of high turn kind of loans. We call that bank tech. So that's the one area we've been focused on. The second area we've been focused on is actually payments and e-commerce, which is where our partnership with MasterCard is there. And we've partnered them on issuance and acceptance and started to roll out across several of the countries. And we're beginning to see nice trajectory picking up there. And in the third area is really around remittance. That's the other big opportunity. Africans in their diaspora, creating a significant remittance opportunity for us to build these corridors that allow people to send money to loved ones, being very clear where the remittance corridors. For sure, we focused on InsurTech, where we have a partnership with Sanlam. So we have a joint venture on insurance. And the insurance joint venture is one where, between ourselves and Sanlam, we know that this one, it will pay off in 5, 7, 10 years' time. But you must build it today. So it might not be the most exciting for many, but it is certainly an area. So we're doing the product set. We are building out the merchant ecosystem, so that, there is acceptance, at every corner where people have mobile money available. So that build out of product, build out of the ecosystem. And right now, we're also very focused on kind of investing in the technology that makes sure that we as MTN, become the equivalent of the Alipay for Africa. That's what we want to be. And so we're also focusing today around investing in technology, to be future fit and to be able to take on the digital native fintechs as these ones, come into our markets, or we go into markets where they're already present. So a very exciting opportunity for us, and one that I think will, continue to add value. And we're seeing, top line growth exceeding the growth of data services. So it's a very important part of the MTN equity story.
Yeah, thank you. It's good to hear those sort of 5 to 10 year stories. Sometimes we get caught a little bit up in the short term, but you don't see what's actually going into the long term, which is exactly where you guys add value. 17 million to 63 million monthly active users also over 8 years. That's a 4x number. That's incredibly high growth. So congrats on that. So let's talk a little bit about MTN's financials, more specifically around the cash flow. Strong cash flow from MTN. We've seen that over the years. It's consistent, high capex, obviously. But how do you focus focus reducing debts versus growth versus returning money to shareholders, whether that be via dividends? How do you strategize that, and how do you choose one in particular or allocate it?
Yeah, look, I mean, we're driven by, firstly, the kind of what we say, the financial formula for success, as well as our capital allocation framework. So the financial formula for success that we as management run the company on is that, over the medium term, our service revenue must grow above inflation. We operate in markets that, have some level of volatility, and inflation is part of that. So we say to our team, service revenue higher than inflation so that we get real growth. Let's manage our expenses very, very tightly, such that actual expenses are growing below kind of blended inflation. We have a capex envelope that is finite. We generally spend about $2 billion equivalent. And therefore, if we do all of that, and we should see free cash flow generation growing faster than everything else. And ultimately, it boils down to free cash flow. So we're very cognizant of the fact that we're in emerging markets and need to deliver a real return. And hence that financial formula for success underpins how we run the company. From a capital allocation point of view, we've consistently, the last couple of years, had a very clear batting order of how do we allocate the capital. Capital is finite, so we need a framework and a batting order that is super clear in the organization, but also importantly, super clear to our investors. And we have these discussions and debate with investors from time to time.